Good morning, one and all. Today I would like to explain about the syllabus of income tax, second year, fourth semester students. Syllabus that is called taxation 2. In this taxation 2, we will be covered capital gains, types of income tax, set off and carry forward loss, and income from other sources. These are the main important points which we will be going to cover. Introduction. Before entering this syllabus, we must to know the meaning and definition, whatever it called. We must to have basic knowledge regarding income tax. Income tax, it means we have the two parts in this sentence, income and tax. It means that each and every person or organization, whatever it may be, whoever it may be, if you earn income, you must to pay tax, that is called income tax. Today's every government, they wants to do some welfare activities, social welfare activities for the society. If government wants to do something for the society, they need some financial resources. So according to our scenario, our government have few income sources. Income tax is the one best among those sources. Income tax will be divided two categories, direct taxes and indirect taxes. If assessee pay the tax, assessee pay the tax to the government. It means that in this type of taxation we have only two parties, in direct transaction in between assessee and the government. These types of taxations comes under the category of direct tax. Income tax is the one best direct tax. Now second one is indirect tax. In this indirect tax we have three parties. It means that government receive the tax through third party. These types of taxes comes under the category of indirect tax. Income tax comes under the category of direct tax. Sales tax comes under the category of indirect tax. Capital gains. Before entering the syllabus, we will be discussed about the direct meaning of capital gains. Gains means income, capital means investment or the lump sum amount for the purpose of purchasing any fixed asset. That the value of the asset is called capital. Whenever you sell your fixed assets, at the situation we must to receive some gain or loss. Those types of gains and losses comes under the category of capital gains and losses. So in this capital gains, it is one of the income of income sources. For example, when we entered in income tax point of view, based on the nature, we will be divide incomes 5 categories: income from salary, income from house rental properties, income from capital gains, income from other sources. These are the main 5 categories of incomes. So capital gains comes under the category of 4. So based on the duration period of the capital gains, we will be divide 2 categories again: short term capital gains and long term capital gains. Short term capital gains means if you sell your property within 1 year or 2 years duration period after purchasing, those types of transactions based, if you earn any profit or loss, then that type of income comes under the category of short term capital gains. This short term capital gains tax calculation percentage is 15%. If you sell your property after completion of the 2 years duration period. At the situation also you will be get some profit or loss. Then those types of incomes are called long-term capital gains. In these types of gains you must to pay the tax 20%. Income from other sources, all types of dividends, income from horse riding and income from cards and lottery tickets and lottery tickets, dividends, capital gain, dividends, lottery tickets, and horse riding, playing cards incomes. These types of unexpected incomes comes under the category of income from other sources. So in this type of income, we will be never divide short term or long term. All types of other sources income comes under 30% of tax. Now next, set off and carry forward loss. Set off and carry forward loss means if you earn any profit, set off and carry forward loss. If you get any loss from any business or house rental or any way, if you forward your loss for coming year, those types of settlements are called set off carry forward loss. I would like to explain about set off and carry forward loss. Best example: if you purchase one fixed asset on 2010 October 1st at the rate of 10 lakhs rupees. Afterwards, you invest 1 lakh rupees for the renovation of your house. It means the total investment of your house property is 10 lakhs plus the purchase cost is 10 lakhs and additional revenue investment is 1 lakh. Total is 11 lakhs. So afterwards you sell that house at the rate of 20 lakhs on 1st January 2015. Then you sell your house on 1st January 2015 at the rate of 7 lakhs rupees. So your purchasing cost is 10 lakhs rupees and your renovation amount is 1 lakh rupees. Total 10 plus 1 is equal to 11 lakh rupees. But you sell your house at the rate of 7 lakhs rupees. 11 minus 7 lakhs is equal to 4 lakhs is your loss on selling of a house. This loss comes under the category of capital loss. So if you forward this loss for the coming year, then this type of adjustment is called set off and carry forward loss. It means that this loss you will be again adjust coming year. If you are unable to settle down this 7 lakhs amount coming year also, then you will be waiting for the next coming year. So these types of settlements and adjustments are called set off and carry forward loss. Next, income from other sources. This is most important in our theory point of view as well as problematic also. It is very easy to understand which type of incomes comes under the category of income from other sources. Means unrepeated incomes comes under the category of income from other sources, unrepeated items. So for example, winning of lottery and income from horse riding and playing cards and dividends. These types of unexpected, uncertain incomes comes under the category of income from other sources. In this income from other sources, you must to pay 30% of tax, irrespective of duration period, irrespective of amount. For example, if you earn 10 lakhs rupees, 10 lakhs lottery, then you must to pay 30% for tax purpose. So 10 lakhs means 30% you must to pay the tax purpose, means 3 lakhs rupees you must to pay the tax returns. Then you will be get only 7 lakhs rupees. So this 7 lakh rupees is called income from other sources. Capital gains, we already explained you. Capital gain, we have two categories based on the duration period, long term and short term. Long term means capital gains and short term capital gains. Types of income tax, direct tax and indirect tax. In our direct tax, we have only two parties, and indirect tax, three parties are involved. Now again, finally we will be discussing about the interaction. In our income tax point of view, if you want to do the tax returns files, you must to understand the basic knowledge regarding the income tax. Those are main important points which are covered in our income tax activities. Assessee, taxpayer is called assessee, male or female, whatever it may be, irrespective of gender, you will consider assessee. Now types of tax, direct tax and indirect tax. Next one is next previous year and assessment year. In our income tax, we have the two types of years. Those are previous year and assessment year. Income arising year is called previous year, and the tax pay calculating and tax paying year is called assessment year. So in this income tax year will be start from March 31st to April 1st. For example, if you want to calculate the tax on your income, so you must to consider assessment year from 31st March to 1st April of next year. And next thing, income, you must to pay the, each and every citizen must to pay the tax to the government. Based on the nature of the income, income sources will be divided 5 categories. Income from salary, it means that if one person earning monthly wise amount every month, same amount, for 12 months duration period, and he or she is working under other person subordinate, and he or she have an identity, then those types of incomes comes under the category of income from salary. And the second one is income from house rental properties. If any person earn any profit from their houses, if any person having more than one house and he or she earned some income from their house properties, those types of incomes comes under the category of house rental properties income. Now third one is income from um, income from business or profession. If one person or more than one persons are interested to invest some capital amount for the purpose of earning profits and they are ready to invest, then afterwards they will get some profits or loss. Those types of amounts comes under the category of income from business or professions. Now fourth one is income from capital gains. If he or she is earned some profit, he or she is earned some profits based on the activities of selling and purchasing of any fixed assets like buildings, furniture and land like that. They will get some amount, then that type of amount is called capital gain or loss. So capital gain and loss also we will be divided two categories: short term capital gain and loss and long term capital gain and loss. So in this short term capital gain and loss, we will be pay only 15,000 rupees, 15 percentage tax. Long term capital gain we must to pay 20 percentage of tax. Now finally I would like to explain about the calculation methods of total income. If you want to know the total income and you want to calculate the take tax on your total income, you must to follow one format. So before calculating this before writing the total income calculation, we must to write down the heading. So in this heading you must to remember that you must be covered 3 points. Those are which assessment year you are going to calculate the total income and which person income you are calculating, and which type of problem you are going to solve. So these three main points you must to cover the heading of the problems. And the second one is the format of the problem. So in this format of the problem we have only three columns: particulars, amount in rupees, amount in rupees. So in this format you must to write down first of all income from salary. So in this income from salary you will be calculate the total income of that person, that person and total income of that person and minus the deductions, then you will be write down the final figure belongs to salary income, and afterwards you will be calculate the second one, that is called income from house rental properties. If you are having more than one house, then you must to calculate the total income from your house rentals house rentals. So at this situation you will be calculate the highest figure of your rent. In that situation you must to follow one formula that is first option is your neighbors, your area, your neighbors rented amount, and the second one is your exact amount, third one is your municipality expected or decided rent. So based on three criteria, which is the highest, you will be selected, that is your house rental income. Okay, now the fourth one is income from capital gains. If you are purchasing and selling any fixed asset on this assessment year before, so then the type of income is comes under the category of income from capital gains. So afterwards, if you are getting any income from lottery or playing cards and any dividends and interest like that, those types of income, so we will be write down the income from other sources. So after writing all these incomes, you will be clubbing the total incomes and club the total income, so that final figure is called income to gross total income. So gross total income, afterwards you will be deduct your deductions, then you will be get net income, net total income. So that net total income you will be calculate the tax. So in this tax calculation also we have the two methods, those are the slab rate method and the flat rate method. For example, if in your problem they are mentioned you are followed the flat rate method, then only you will be following the flat rate method. Otherwise you must to implement the slab rate method only. So it means that in this slab rate method we will be divide our total income in different slabs. So each and every slab have their own percentage of tax. Based on that criteria we will be calculate the tax.